Good afternoon. We're getting right down to business here, doing it live, doing more at 4 weekday afternoons right here on 790 KBC, live on the air, streaming live online worldwide at kbc.com, and you're on demand. Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, all of your favorite podcast platforms. Happy St. Patrick's Day. After a rough start this morning, Wall Street got with the program and ended up wearing some more green. Bouncing back from a rough week last week, stocks did move higher today at the closing bell with the focus of attention on some mixed news. We did get the retail sales numbers out today, which was in focus, and we'll be getting economic reports this week ahead of the Fed's meeting. That'll be wrapping up on Wednesday with a decision on interest rates and a statement on the economy, and then, of course, the usual full-blown news conference from Fed Chairman Jerome Powell. That now came in for a closing gain today of 353 points, the S&P 500 of 36, and the NASDAQ up 54.5. The market averages climbed after a sell-off that saw the S&P 500 move into correction territory last week, and the Dow last week, as it turns out, booked its worst weekly performance since March of 2023. Treasury Secretary Scott Bessent inflamed concerns over the weekend when he told interviewers that he's not worried about the recent slump in stocks, saying corrections are healthy, adding that there are no guarantees that the U.S. will avoid recession. Tariffs, of course, spooked the market last week. We'll be talking more about that coming up here shortly. We did see the yield in the 10-year note move to 4.31%. The volatility index, the Wall Street Fear Index, slipping today by 6%. We did get the retail sales numbers out today. That was the main event as far as economic news is concerned. The retail sales numbers coming in 0.2% for the month of February, increasing less than expected. Meanwhile, back east, the New York Fed's reading on manufacturing activity showed a sharp pullback in the month of March, with the business conditions index falling from the February reading. Of course, Wall Street this week will be watching what's going to happen with the Federal Reserve's two-day meeting, which will be wrapping up on Wednesday. That'll be the main event this week as far as economic events. Taking a look at Berkshire Hathaway stock, that's the most expensive on the New York Stock Exchange. Berkshire Hathaway Class A shares hitting a record high, closing at $784,957. Looks like it was up more than $13,000 today. That, of course, is Warren Buffett's investment company, Berkshire Hathaway. The Class B shares, which are a bit less expensive, moved up more than $8 today at $523 and change. PepsiCo making news today, announcing it's going to be paying nearly $2 billion for a soft drink company that has a social media following. It was featured on Shark Tank, and that is Poppies. They plan to tap into Poppies' positioning as a better-for-you soda company, offering probiotic drinks with less than 5 grams of sugar per serving, among other things. Intel seeing a rebound today after Reuters reported Intel's new CEO is considering significant changes to the company's manufacturing and AI strategies. We're, of course, watching what's happening with the tariff situation. President Trump says he does not intend to create exemptions on sweeping steel and aluminum tariffs. And he reaffirmed that additional duties will go into effect early next month. That's the very latest on that. He added reciprocal and other tariffs will kick in on April 2nd. I'll discuss that news, plus the latest retail sales report, the ongoing economic impact of this year's devastating firestorms here in Los Angeles. I'll talk about it with prominent Los Angeles area economist Dr. Robert KLEINHENZ will be joining us live later this hour. But first, on your money, the markets, the economy, and the whole works now. Joining us live, Gabriel Wisdom, Managing Director of American Money Management, based here in Southern California, also author of Wisdom on Value Investing. Good afternoon, Gabriel.
Hello,
Wisdom. Are you wearing more green yourself here this afternoon?
I'm
Happy
feeling
St.
lucky,
Patty's Day.
Frank. Happy St. Patty's Day to you. You know, President Trump's view of trade is front and center here right now. We're seeing concerns among retail buyers. Several consumer-related companies have noted that consumer spending might be starting to flag, and there's been a negative wealth effect among baby boomers because baby boomers, those of us in that age bracket, currently hold a record $25 trillion in corporate equities and mutual funds. That's 54% of the total, according to Yardeni research. And falling stock prices, since the tariffs became front and center, have had a significant negative wealth effect, at least psychologically. and we've been seeing it in the markets. But today, we were lucky. The broad market rose, and all is well. We're going to see what the Federal Reserve has to say on Wednesday.
All right. In the meantime, those four-leaf clovers seem to work today all over the place. And what about gold hitting a new record high here and right now hovering at around $3,009 an ounce here at last check?
It's funny. When interest rates started going up, Frank, gold was expected to go down because it doesn't pay any interest. That's traditionally what has happened with gold in particular. But the exact opposite happened because central banks, one of the biggest buyers, China, but central banks around the world, including our own U.S. central bank, have been accumulating gold. So for 17 or 18 straight months, we've had the People's Bank of China gobbling up gold, and apparently, according to the World Gold Council anyway, they see China stockpiling more gold, and there will be some stimulus over there. So I agree with analysts who have a $3,500 to $4,000 per ounce target on gold.
And, of course, a lot of discussion about gold being an inflation hedge. And even though inflation has officially come down, gold is moving up. A lot of concerns about how tariffs will impact inflation. Do you see that as a significant factor in the rise in the price of gold as well?
Well, I see it as a significant factor in pretty much everything, Frank. The president's view of trade is really a form of mercantilism, the old zero-sum philosophy where a nation is considered wealthy if it sells more goods abroad than it buys, and countries that have trade surpluses with the U.S. are viewed as taking American jobs and wealth, and so it makes them targets for higher tariffs. Now, does mercantilism work historically? During the McKinley era, it certainly didn't. Using tariffs to balance the scales results, though, in economic slowing. If you want to bring inflation down, generally it works because consumers back away. And I think that's what we're beginning to see.
We're seeing oil come under pressure in all of this, hovering in the mid-60s now, and that's been good news for inflation. Looks like gas prices have come down significantly across the country, except here in California, where we're again paying more than they're paying in Hawaii, which is in the middle of the Pacific Ocean.
Yeah, well, we've got that cocktail, that special environmental cocktail that we pay for. But there have been 8 countries in the Middle East that have now started to increase oil production. Saudi Arabia, obviously, Iraq, United Arab Emirates, I think it's Kuwait, Algeria, Oman, a few others. But the OPEC alliance is bringing on additional supplies. So that's one reason why oil prices are low. Middle East tensions, though, and the Russian war in the Ukraine are two of the biggest known risk factors. On the plus side, we've got U.S. shale. The shale industry has become a key counterbalance now, especially with the president making that easier to produce.
All right. I know you follow Warren Buffett very closely, the investment genius, guru, and had his big shareholders meeting recently and talked about that big pile of cash he has. It looks like he's added some more to the tally here today with Berkshire Hathaway Class A shares hitting an all-time high, just shy of $785,000 per share. This is the stock that has never split over the years and has gotten all the way up to $785,000 just about now, a gain of nearly $14,000 here on the day. What about that big news here?
It's remarkable because Berkshire Hathaway's cash positions have doubled over the past 12 months. And even with a large hoard of cash, the Oracle of Omaha outperforms the market. The reason I think he's done so well is he's held on to a large position in Apple. Also, he owns a number of companies that haven't done so well in the past year, but are now starting to do very, very well. Coca-Cola, for example, is one of the dogs of the Dow, one of the worst performing Dow 30 stocks last year, but this year is a whole different story. The other reason why I think he's done so well is the Occidental Petroleum position. He just doesn't own common shares in Oxy. He's got basically a piece of the company, and they're getting involved in all things energy. So Berkshire Hathaway shareholders are benefiting.
And interesting, he shed a lot of Apple stock before the meltdown of the Mag 7. Apple today, speaking of Apple, up about 50 cents today at 214. It looks like NVIDIA, which of course has seen big hits lately, pulling back today by about $2 at 119. It looks like here, and Tesla, part of the Mag 7, which has seen a very rough ride. And we'll be talking more about Tesla later this hour. It looks like it saw a rebound here. What about the Mag 7 names here? Actually, Tesla was down nearly $12 again today at 238 and change. What about the Mag 7 names here now?
Well, there's official confirmation of Tesla's global sales coming from all corners of the globe, and then they'll announce in early April when the company reports the first quarter deliveries. But it's pretty clear that Tesla deliveries are down maybe as much as 28% from the estimates last year. So that's the problem at Tesla right now. But the Magnificent Seven companies are expected to spend some $325 billion on capital expenditures this year, most of it on artificial intelligence infrastructure. So, we're talking about Alphabet or Google. $80 billion will be spent by Microsoft, $100 billion by Amazon, $65 billion by Meta platforms. And this is all mostly AI infrastructure. But if it turns out that DeepSeek and some other very more efficient, cheap alternatives to the chips that NVIDIA sells for AI, if that takes hold, then we're going to see major disruptions with the Magnificent Seven, I think, excluding Apple. They don't have a major investment in this.
All right, what about Intel, which made news today, moving up nearly $2, back to 25 and change. That stock had taken a haircut recently. Oracle on the rise at 154. What are your thoughts about some of these other tech names that have taken hits in the NASDAQ recently?
Well, I like them on balance. I guess my favorite would be the fallen angel here, Intel, and not because I think Intel is fundamentally such a great company. It's got a terrific franchise. It's known worldwide. Intel Inside. We've seen that for many, many years. There's interest among a number of suitors, Broadcom, Taiwan Semiconductor, et cetera, but they've got a new CEO, and that's the magic. Now, any deal involving Taiwan or a semiconductor or any foreign nation would have to face some constraints given the rules of Intel's CHIPS Act funding. They received $3 billion in the CHIPS Act, and it's very unlikely that any foreign entity is going to take over an iconic U.S. firm like Intel. But I like the way it's acting here.
All right. We talked to the biggest fans of crypto as well as the harshest critics. Some don't want to even call it digital gold. In fact, just the opposite, and some other nastier names. And as we heard recently on this program, but what about cryptos? I know you follow what's going on here.
Yes, I do. I think that crypto clearly is a real asset. Anybody saying otherwise is, just expressing their bias. And I have some biases as well. But the U.S. Bitcoin reserve is coming. There's increased interest around the world. There was some $5 billion in liquidations, though, over the past week and a half in the 12 Bitcoin exchange-traded funds. So there's been some selling, and you see it in the softness of the Bitcoin quoted price. What's very interesting to me, Frank, is the new quantum chips that are being developed by pretty much every major technology company. Quantum computing actually has the potential someday to unlock crypto formulas and get in there, and it ruins the party. So as quantum comes online, I think we may see more selling in the crypto space.
That is very interesting. Well, thanks for highlighting that. When folks come to you and they say, "Hey, Gabriel, want to get into crypto," what do you normally tell folks who want to dip their toes into crypto? Obviously, it's been around for quite some time now, but it's hard to ignore these record highs we saw earlier this year, and then of course the sell-off recently, and maybe this time people are getting attention here with this pullback. What do you tell the folks here? Would you suggest ETFs or some of the specific names?
Well, the ETFs give you liquidity, and that's essential, I think, in something as as mysterious for most people as crypto and Bitcoin. There's an old saying that it's better to be approximately right than 100% wrong. And many of us have been 100% wrong about Bitcoin and crypto. So it's better to be approximately right and have some exposure, I suppose. That's what I'm telling people.
Yeah. And of course, Warren Buffett likes to invest in things that only he understands. It looks like he's warmed up somewhat to crypto, with one of his companies apparently having some interest in it now. But that's certainly something that he's felt very strongly about it. If you don't understand it, stay away from it.
That's right. He and his partner, the late Charlie Munger, referred to it as worse than rat poison. But he's been buying Japanese trading houses. He bought 5 Japanese companies in the last quarter that are all involved in trading, and some of it is crypto. So you're right. It's hard to ignore what's going on.
Right. In the meantime, in case you hadn't heard the news, folks, if you're just joining us, Berkshire Hathaway, Warren Buffett's company, hitting a record high today. At this point, Gabriel Wisdom, any specific places where you're putting money now and/or taking it off the table?
Well, Frank, I mentioned how well Coca-Cola's been doing and how poorly it did last year. The other Dow underdogs, we'll call them, borrowing Chuck Carlson's moniker. I like the way Verizon is acting. Chevron is making deals. Amgen, Johnson & Johnson, Merck, Coca-Cola, IBM, and Cisco, those were the worst performers last year, and they're doing pretty well this year. In fact, they haven't had the effects of the Mag 7 fallout or the technology sell-offs here. They weren't inflated to begin with, and while they were depressed, revenue and earnings continued to grow along with dividends. So I do like those. And then finally, I would say it's time to pay some attention to the property and casualty insurance companies. They got pretty unpopular for good reason. But I'm looking now at an exchange traded fund that has most of the property casualty insurers, and that would be the Invesco ETF ABWP as in Papa.
Terrific. Well, Gabriel, thank you very much for taking the call. We'll let you get on with the St. Patty's Day celebrations and a toast to an up day here, and 2 up days in a row, by the way, an additional reason for
No Contest Wrestling. O'Shea Jackson Jr. and TJ Jefferson with the biggest names in the game.
Ladies and gentlemen, X-Pac.
Getting suspended in school, that's the number one thing people, when they meet me, they tell me.
I got detention.
Yeah, everything.
Ladies and gentlemen, Liv Morgan.
I couldn't believe that was my time. I was so grateful.
Talking about living dreams, no pun intended, TJ. Relax.
I rarely do these anymore, but I was really looking forward to this.
The No Contest Wrestling Podcast, part of the Rich Eisen Podcast Network. Follow and listen on your favorite platform.
For a celebration here this afternoon and evening, Gabriel Wisdom with American Money Management and author of Wisdom on Value Investing. Gabriel, thank you very much for taking the call here this afternoon.
Thank you, Frank.
Out to the freeways we go now, 790 KBC. Mottek On Money continues, 790 KBC. Good afternoon. We have an update today to celebrate St. Patty's Day. The Dow closing higher by 353 points, settling at 41,842. The S&P 500 up 36 at 5,675, and the NASDAQ gaining 54.5 points to 17,809. The yield in the 10-year note now at 4.31%. Taking a look at the price of oil right now, down 25 cents at 67.33 a barrel. Oil prices have come down dramatically in recent months. Gas prices, though, not so much. They have come down, but here in the Los Angeles area, you're still paying $4.66 a gallon for regular, $5.04 the average price for premium, both about 8 cents below where they were a month ago. 30 cents a gallon, by the way, below where they were a year ago. The volatility index on Wall Street, the VIX index, pulling back 6% today, as we did see a rebound. We did see shares of Intel in the spotlight today of $1.64 at $25.69. Berkshire Hathaway Class A shares, that's Warren Buffett's company, closing up by nearly 14,000 to a record high of 784,957 a share. That, of course, is the most expensive stock on the New York Stock Exchange. And hitting a record high today, Berkshire Hathaway Class B shares, less expensive, up $1 to make that $8.41 at $523.01. Taking a look at the price of gold, it too took the spotlight again, popping above $3,000. Right now it's at $3,009.10 an ounce. Silver back above $34 an ounce at $34.01. And platinum has made a move lately, now at $1,025.70 an ounce. Apple shares up 51 cents at $2.14. Let's bring up the Magnificent One, the so-called Magnificent One NVIDIA, closing down $2.14 at $119 and change. Checking the cryptos now. Let's take a look at the wild moves we've seen lately here with Bitcoin at the moment, down about 500 at 83,979. Ethereum down 8 at 1,926. And Doge at the moment at 17 cents. And now the latest news, 790 KBC. Mottek On Money continues, 790 KBC. Nervous times on Wall Street and Main Street, mostly due to the uncertainty over tariffs announced in Washington against U.S. major trading partners and retaliatory tariffs announced in response to tariffs. News spooked the market last week and fueled inflation worries, and the uncertainty has impacted consumer and business confidence. Today we did see a rebound for the stock market. President Trump says he does not intend to create exemptions on steel and aluminum tariffs and repeated that additional duties will go into effect early next month, namely April 2nd. Meanwhile, today we got the latest reading on retail sales, the latest jobs report out for the state of California and the Los Angeles area as LA struggles to recover from the horrific firestorms this year. Let's bring in prominent economist Dr. Robert KLEINHENZ, economist at KLEINHENZ Economics, principal economist at KLEINHENZ Economics, also director of the Office of Economic Research at Cal State Long Beach, and research fellow Inland Empire Economic Partnership and Lowe Institute. Sounds like we got the right person on the line here. Robert KLEINHENZ, thank you very much for taking the call here this afternoon.
You're welcome, Frank. Where do we start?
From the beginning, let's talk about the retail sales, first of all, which came out first thing this morning.
Yeah, so not bad, I guess. Up 0.2% on a monthly basis and up 4.2% over the previous year. So that's good news. We're coming out of the starting this is for the month of February. It's coming out of the starting blocks this year, doing decently as far as retail sales are concerned. And that kind of comes on the heels of a good quarterly report for consumer expenditures back in the fourth quarter of last year. So the question is, how will this hold up in the coming months as we bear the brunt of these tariffs, whether they're coming through on the goods we're purchasing or the materials that are used to produce them.
All right, on the tariffs, a lot of changing minute by minute, a lot of moving parts here. But as you understand things here at the moment, what do you see happening here with the tariffs and the economic impact?
Well, you've led off with the word uncertainty in this segment, and I'm sure you've used it on many occasions during the last couple of weeks, and that is like the front and center word at this time. We just, we hear changes in tariff policy practically from one day to the next. So regardless of the tariff rates themselves, that uncertainty that is introduced either by the threat of tariffs or the actual implementation of tariffs has really caused challenges for business owners trying to figure out how to proceed. And then in response to that, the retaliatory tariffs that you mentioned are also going to have an adverse effect. The bottom line is, I mean, we could go into great detail on this, but the bottom line is that it's going to take time for firms that are producing in China, Mexico, Canada, and elsewhere to shift production, if that's even an option. And if not, then we're facing higher prices for consumers and higher prices for businesses. Purchasing power is going to take a hit. And it's not clear whether or not, the administration is just using these tariffs as bargaining chips to get things like increased enforcement of immigration policy, or if they're genuinely trying to reshore manufacturing, for example, here in the United States. And I think that's a very tough nut to crack because we're a high wage country. We need to produce high value products in order to create that value added that makes it worthwhile. And there are a lot of things we get from places like China and Mexico that would not fit that bill.
On the job front, and by the way, we're on the air live with prominent Los Angeles area economist Dr. Robert KLEINHENZ. On the job front, Dr. KLEINHENZ, you had a chance to take a look at the latest numbers here impacting the Los Angeles area following the firestorms and all the numbers here in the state of California. Could you share those with us now?
Sure. So we got our first report for 2025 this past Friday for the state and for the region. And the bottom line is that both the state and LA County are struggling here at the beginning of the year. In monthly terms, LA County's jobs fell by nearly 100,000. Now, that's not seasonally adjusted, and we know that things like retail lose jobs and transportation and logistics have seasonal declines in jobs. So without accounting for those, the fact is that just about every industry lost jobs from December of 2024 to January 2025. And so the unemployment rate has actually held steady at about 6%. It's actually down slightly from the previous month and up from the previous year. But we're really having a difficult time with this economy. The fires certainly have had an effect, but I think we need to keep in mind that we're talking about maybe a few tens of thousands of jobs in a labor market that has over 5 million persons, all the way around the wildfires, which are certainly having significant impacts in terms of loss of property and so on in those immediate communities. When you zoom out to the county level, where we've got 3.7 million homes and we've got a $1 trillion economy, these effects are going to be somewhat localized and are probably not going to have a lot of long-term negative impact on the overall local economy, but those neighborhoods, those communities are certainly going to take a hit, as will those homeowners and renters.
On the air live with Dr. Robert KLEINHENZ, a prominent Los Angeles area economist. So the U.S. unemployment rate stands at 4.1% at last check, and the Los Angeles County unemployment rate now at 6%. Historically, that's have we seen this much of a difference in the past? Anything that history will tell us here? I know we've always been higher than the national rate.
To be honest with you, I haven't checked the comparison of LA County with the U.S. rate. I know that through thick and thin over the last 30 plus years, when you compare the California rate with the U.S. rate, there's about a 1.3% differential. And we're not too far afield from that. In January of this year, the unemployment rate for California was 5.4%. It was 4.0% for the U.S. on a seasonally adjusted basis, so a difference of 1.4. So, yes, we typically have a higher unemployment rate in California compared to the U.S., with few exceptions, usually when the economy is firing on all cylinders. And we typically have a higher unemployment rate here in LA County, largely due to the composition of the industries. So I don't know whether this 2% differential is a whole lot different from the norm. The fact of the matter is the LA County economy really hasn't fully recovered from the pandemic, and certain key industries, like the motion picture and sound recording industry, still shy in terms of job counts. Other key industries are still not yet back where they need to be. So the local economy is moving forward. I would think it will move forward through the year, but it's getting off to a very rough start.
Have you made any new calculations as far as the economic impact of the horrific firestorms in the Palisades, Altadena, and the other areas that were hit by the fires this year?
Well, there's a lot of research that's been out there, and so I don't necessarily want to reinvent the wheel, but early on we saw, estimates in the hundreds of billions of dollars, the damage and so on. More recent studies have shown that the estimated property damage is somewhere between $30 and $50 billion. These are large numbers, don't get me wrong. And the loss of housing was somewhere in the neighborhood of 16,000 housing units. So for comparison, I think it's good to know that last year, LA County had a total of 20,000 housing units permitted, new housing units permitted. So we're talking about a loss of housing units that's only somewhat smaller than the amount of new housing we've been building in recent years. So it's definitely putting a dent in our housing stock. Our housing stock, by the way, 3.7 million units. So not a huge dent, but still a dent. The damage, the property damage of $30 to $50 billion, a good part of that's probably going to be recovered through insurance payouts. I think the real thing here, a couple of things. One, it's going to take time for these homes to be rebuilt. And in the meantime, we've got to consider that these communities have been fragmented, and the people who live in those communities have to try to get back to a sense of normalcy. So those are some of the big challenges that I think are really swamping the dollar figures. You know, we've got a $50 billion property damage. We've got a real property in LA County is probably measured in the trillions.
No Contest Wrestling, where O'Shea Jackson Jr. and TJ Jefferson bring their hot takes with the biggest names in the game.
Ladies and gentlemen, Braun Breaker. Welcome to the pod.
My aspirations in life, I always wanted to be a WWE superstar.
The Prodigy, Roxanne Perez. I gotta talk about the Hugger cosplay.
I mean, it was perfect, wasn't it? You know?
LA Knight.
What am I doing here? At this point, I can retire. See you, everybody.
The No Contest Wrestling Podcast, part of the Rich Eisen Podcast Network. Follow and listen on your favorite platform.
Of dollars. So they don't.
Well, we're going to have to continue the conversation on the real estate front with you, as I know you served as deputy chief economist of the California Association of Realtors for many years, and also top economist at the LAEDC. So look forward to many more conversations on this important subject as the recovery continues. That is Dr. Robert Kleinhenz, economist, principal economist at Kleinhenz Economics. Dr. Kleinhenz, thank you very much for joining us live here this afternoon on Mottek On Money on 790 KBC. Mottek On Money continues, 790 KBC. Let's get it into gear here now and talk cars with Lauren Fix, editor-in-chief of Car Coach and co-host of the Total Car Score podcast with Elon Musk. Of course, in the spotlight with Tesla, the stock has taken a hit. And also, President Trump was at the White House extolling the virtues of Tesla, and let's see if that helped Tesla's sales. Also, President Trump turning off thousands of EV chargers in all federal government buildings. Let's get the latest on all this. Lauren Fix, take it from the top. What about those EV chargers, first of all, at the government buildings? What is the status of those at the moment?
Well, Trump did say shut the power off and sell the fleet. So Trump is turning off all 8,000 electric vehicle chargers at all federal buildings only. So I did post this. I want everyone to realize it's federal buildings, not chargers at your local park or your grocery store. So if you were going to the VA and charging for free and it wasn't even a federal vehicle, you're going to have to find a way and pay for that. So I think the big thing to understand is that he says this is not part of his mission. And the General Services Administration, known as GSA, is responsible for managing the federal buildings. They shut down all the EVs and their charging plants. There's about 650,000 cars, which I think is a lot of vehicles that you and I are paying for that they're getting to use for free. I think it's an excessive amount of vehicles, but the goal was under the Biden administration to make them all electric. That would mean you need 650,000 chargers, but that's not exactly what ended up happening. The amount of vehicles was 58,000 vehicles that they purchased, which would explain why electric vehicle sales were up in certain states. But in addition to that, they were getting free charging, and anybody else who owned an electric vehicle that either did or didn't work for the federal government could go and charge there for free. So as you and I know, there were a lot of people charging and using it for free rather than charging at home or paying like the rest of us do. And so that's why the GSA said we're shutting it down. And they'll either put them in warehouses and pull out those gasoline-powered vehicles, or they'll sell them. And there could be a really good deal on a lot of government vehicles that are pretty much brand new, much like what Hertz did when they emptied their fleet.
Very interesting, and I remember when you brought this up a few weeks ago, and thanks for expanding on that breaking news at that time, and thanks for the update. Also, I don't know if you saw the news today, but according to various sources, a major rival to Tesla announcing today that its electric vehicles can charge in only 5 minutes. That's the Chinese manufacturer BYD. Looks like this will not be available here in the U.S. at this point, but that might change the equation if you can charge up in only 5 minutes, right?
Well, I think you got to realize that when you charge a battery up that quickly, there's going to be excessive heat. So first off, we don't have battery chargers here in the U.S. that can charge up that fast. The fastest we have right now is the Tesla chargers. If they were to charge that fast, you would probably not want to be in the vehicle because the induction heating would be quite a lot. And you wouldn't want to leave an animal or a child or a person in the car. So keep that in mind if we were to get those. China has different regulations than we do, and BYD is one of the largest electric vehicle manufacturers in the world. But I find what's interesting is why people are selling off their Teslas and finding this to be part of a political statement, which it shouldn't be. You should be able to buy whatever it is you want. It shouldn't have to do with politics. But you're watching people sell their cars at a loss. But on top of it, they don't realize is the number one American-made car is Tesla. It's a U.S. car company. Most of the components come from here, including his battery factory. And everyone's saying they're going to go rush out to buy something else that is where most of the components aren't here. One of the senators purchased a Chevy Tahoe, great truck, but most of it isn't even built here, let alone the components. So again, it's easy to put, to make this a political move. You should not do that. If you love your vehicle, electric or otherwise, then buy it. You should be having choices and not being limited on those choices.
Yeah, it looks like Audi is listening to what you just said, cutting about 7,000 jobs and appears to have abandoned their EV-only push, as some of the other ones are doing a rethinking of EVs these days. Tell us what you know about that.
That's a very smart idea. I've been saying this to you and your listeners and all the people that listen to me at Car Coach Reports for years, actually about 20 years. And I've taken a lot of pushback from other media, from other journalists, from other car manufacturers, and now they're all changing their minds. That would be BMW, Mercedes, Audi, Volvo, even General Motors that said, we'll build what customers want. What a great concept. Let's build something that actually makes money rather than build something at a loss that nobody wants. Because if you go around the dealer lots around the country, and it's also true in California, you find a lot of electric vehicles. And still, the number one selling electric vehicle is a Tesla.
Excellent points as always. Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Be sure to check it out, and always appreciate you coming to the line here, Lauren Fix. Thank you very much for joining us live here this afternoon. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money on 790 KBC.
Jim Rome takes on sports.
Why? Because you're not playing me.
With rapid-fire takes.
Y'all went from the Super Bowl straight to the toilet bowl. He's not over the NFL. The NFL is over him.
Scorching debates.
All the good, all the bad, all the ups, all the downs.
He's the Spitfire of sports smack.
Sorry for what I said because it was appropriate when I said it, but I can't say it anymore, dude. You are killing the game.
The Jim Rome Show podcast. Follow and listen on your favorite platform.